Are you a non-resident Indian working or running your business in India? Your tax compliance is our priority. Here in this video, we'll discuss how to file your income tax returns with complete details on the process, documents required and due dates. To know the tax rates applicable, you can read our blog linked in the description below as well. Before we begin, let me first introduce myself. Hi. I am Tushar Bakshi, a startup advisor at Set India Biz, where we provide tax, compliance and IPR services to the Indian businesses. In this video, we will cover definition of NRI, calculation of NRI's total income, NRI ITR filing process, and NRI ITR filing due date. So let's begin without any further ado. Who is an NRI as per the Income Tax Act? The Income Tax Act does not directly define a non-resident Indian. Section 6 of the Act defines a resident Indian and clarifies that a person who does not fit this definition will be considered an NRI. So, who exactly qualifies as a resident Indian? There are two criteria. An individual who has resided in India for at least 182 days in the last financial year is considered a resident, and an individual who has been living in India for at least 365 days in the 4 years preceding the last financial year with a minimum of 60 days in the last financial year. But there are exceptions to this rule. If an Indian citizen has left India for foreign employment or as a crew member of an Indian ship, they are considered as a resident only if they have lived in India for at least 182 days in the last financial year. The second criteria is not applicable here. This brings us to the next important question. What if the entity is not an individual citizen but a corporate entity or a HUF? What is the criteria for their NRI status? Let's understand. A non-resident HUF is one whose place of effective control and management during a particular year is situated wholly outside India. In simple terms, this means that all major business-related decisions of the HUF are made outside India. Similarly, a company is considered non-resident if it is incorporated in India but its effective place of control and management resides outside India. Simply put, the place where a company's key decisions are made decides its residency status. Moving on, once you have analyzed the taxpayer's residency status, be it an individual or non-individual, the next step is calculating the total income. This step is crucial as the total income calculated here will be declared in the ITR later. How to calculate the total income of an NRI? Section 5 of the Income Tax Act limits the scope of total income for both resident Indians and non-resident Indians. While resident Indians have to pay taxes on all the income they earn in a year within and outside India, NRIs have to pay taxes only on the income they earn in India. Foreign income of NRIs are not taxed under the Income Tax Act. The sources of income may differ. A few prominent ones include income from salary, income from rent, income from the sale of assets, interest income from savings and debt instruments like bonds and debentures, income from business, income from dividend, lottery winnings, royalties, and more. Once an NRI has calculated your income, the next step is to declare it through ITR. So let's understand the process of filing ITR of NRI. How to file ITR of an NRI? The first crucial step in filing an NRI's income tax return is determining their residency status. We have already discussed under what circumstances an Indian citizen is considered to be an NRI. If you still have doubts, refer to Section 6 of the Income Tax Act or consult our legal experts directly. You can also post your questions in the comment section below. Your next task is to choose the right ITR form. Usually, NRIs use ITR-2 form to file their tax returns if the income is not generated from a business or profession. However, if the source of income is a business or profession, ITR-3 has been prescribed for use. Before filing the ITR, make sure you calculate the total taxable income. We have discussed previously that the taxable income of an NRI does not include the income generated outside India. It only includes the income generated in India. Also, analyze and declare any deduction or exemption claims under relevant section like 80C, 80D, 80G, 80I, and so on. Don't miss the golden opportunity of reducing your taxable income. Besides, if you are worried that your income will be taxed again in your resident country, check if it has any DTAA agreement signed with India. Wondering what it does? Well, DTAA stands for Double Tax Avoidance Agreement. India has signed such agreements with several nations, enabling their residents to come and earn in India while paying taxes in any one country as per the agreement's terms. This saves the NRI from double taxes he has to pay in both countries. That is the country of residence and the country of income generation. With the total taxable income calculated after reductions and exemptions, the final step is to file the ITR form. For this, you need to access the income tax e-filing portal. Select the prescribed form and fill in the details of the taxpayer, his income and residency. Finally, declare the exemptions and deductions to reduce the taxable income. Once all the details are filled correctly, attach supporting documents like Form 16, Form 26AS, PAN of the taxpayer, proof of the tax residency, and any other document required. To submit the form, conduct online verification using Aadhaar OTP or EVC. If both options are unavailable, file ITR-V or ITR verification form within 120 days of ITR submission to finish the verification process. Lastly, submit the form, download its acknowledgement, and track its status till the department accepts it. This brings us to the end of the process. But there's still one important question to answer. When is the right time to file an NRI's ITR? The due date for filing an NRI's ITR is the same as any resident Indian. For non-audit cases, the due date is 31st of July. For audit cases, the due date is 31st of October. If you miss these deadlines, you have the option to file belated returns by 31st of December with additional fees. And this brings us to the end of this video. Hopefully, you have all the information needed to file an NRI's tax returns. If you still have questions, post them in the comments below or get a free consultation from experts. Contact details are given in the description below. If you found this video helpful, hit the like button, share with your friends and colleagues, and subscribe to our channel for more informative content ahead. Click on the notification bell so that every time we post a new video, you are the first one to get notified. Thanks for watching. Watch our other videos as well.